Good day everyone. Today in our class lesson I'm going to be showing you what do I see in this commentary of about V75, the volatility 75 index on the monthly time frame. So I'm going to be breaking down, doing a kind of top-down analysis of what do I see and what do I expect price to do or to likely do. So right now, let's just, without wasting much of our time, let me just get straight into what I'm about to show you guys. Now, a lot of people thought the V75 we go up. I remember last time in our Telegram channel we were talking about the V75. That was last month or previous months. So I was explaining why price will not go up before I did the V50, and I was just trying to check out, and also I was giving you guys a clue of what do you see around this area that my mouse cursor is. Already we know that our order flow is bearish. So concerning what I said, we know that the algorithm is seeking for is pushing price lower, seeking for discount price. So we are now at a discount price. We've broken below equilibrium. Somewhere around here should be our equilibrium. So my price data chart is not allowing me to see the extreme far end, but those that are using the MT5 on their phone, they can be able to see the end of this price data over here. So one thing I know that is this area line, this line exactly where it is, we are somewhere here or here should be our equilibrium of our range from our swing low to the swing high here. So now the market is seeking, the algorithm is seeking for discount price array. So with that being said, because the algorithm is seeking down for higher time frame, for the monthly discount array, which is on the higher time frame, then the algo's bias will be hunting for bearish setup in all lower time frame to execute short positions to continue pushing price lower until the PD arrays are met. So now, where is the draw on liquidity on the monthly time frame? Based on what I see. So based on what I see, first let me just narrate. Number one, we have an order block, a bearish order block, a bearish monthly order block. It was validated and tested at the low. Yes, we didn't get it tested at the low and the opening price, but we didn't see it get tested at the mean threshold. So this validated it. There was a kind of move here, validated the other block, although we did not see a fair value gap here on the monthly time frame. So if we go back to the weekly time frame, let's check what was happening here. So this is the weekly time frame. This was all the moves that happened. Well, on the weekly time frame we have a fair value gap. So there is a fair value gap here after this price was validated. So initially we should see this area was, I think this week was this monthly order coming. So this area here, I want to see what is going on there. So let's just do our chart markups. So these lows that we're taking here, when we go to our weekly time frame, I have to minimize this. So when we get our weekly time frame, this was the low that was taking, so not this place. So this is why we need to mark. So we saw that this gap stayed opened. Why did the gap stay open? It has a reason why this gap stayed open. So that's the reason why this gap stayed open. So this gap stayed open because of the gaps was filled, but this gap stayed open. So that opening of this gap, we tend to understand that the reason why the gap was stayed open, it was just filled a little bit here, somewhere here, just filled a little bit. So this became a breakaway gap. So this gap was left open because its assignment is to take a draw on liquidity, which we are seeing at these equal lows here. So the reason why it stayed open is because it has an assignment to push price lower and stay here. So now we have these gaps. We have gaps here. We have a fair value gap that was reclaimed. The fair value gap was here. This fair value gap down here. So that was the fair value gap that was reclaimed. So we have that fair value gap. So that fair, let's zoom forward. Let's zoom in rather. So this was the fair value gap. Market came back to that fair value gap, did not close, although it tested the body, right? But this was the bearish order block that was created. This order block, which was a breaker block here. So this is a breaker. This is a breaker here. Why did I say this is a breaker? Because we have a high, a low, a higher high, and this break in market structure. So if we are able to use this, look at that, that was the breaker on the weekly time frame. So we have a high, a low, then a higher high, and the market broke this structure and this breaker was validated. So now, not only that, we have fair value gap here. This fair value gap was when you pair the fair value gap with the breaker. If you are using the breaker, so we are using the last down close candles. This is not the last. We won't take this as the breaker. This was the low, the significant low that was taken. So this is the low, the high. So this one is just inside of it. It's an order block inside of it. So we are using the bearish candle. Just we treat it like an order block. So this is the breaker block. This is the candle that created the breaker block. So it's not this brick green candle. So this last down candle, if you take your fibs, and mark that candle, hold on a sec. We take our fibs and we just do something like that. So something like this, yes. So what are we looking for here? We are looking for, I know you guys will be shocked with what I will show you guys now. So now this last down candle was the candle that validates the breaker, the bearish breaker for the V75. So the market traded through and it was validated. There was a fair value accompanied with a fair value gap. So that was that fair value gap that was traded into it, reclaimed again. How many times? Multiple times. So let me just take this thing away. What I want to do is that you will take the breaker. We don't want to see, whenever you are marking a breaker, especially a breaker that's like this, we don't want to see the last, the 50% of the last down candles or series of the last down candle that created the breaker. You know, a breaker is just, a bearish breaker is similar, the way they look like is similar to an order block. So this is, we use them to like another block. We use the levels. So this is the candles that created, that validated the breaker, the higher high and the low that was taken. So now I'm going to be marking this 50% the mean threshold of the breaker block. So this will be that would be the mean threshold of that breaker. Now just watch closely again what I used to say. Now this is the 50% of the breaker block. Alright, so this is the monthly bearish breaker, the 50% of the monthly bearish breaker when we take our flips from the body to body of this last down close candle that validated the breaker that I was explaining that we saw. So that was the criteria. So now the levels we use, the 3 levels are also important. We use the low, we use the 3 levels. We use the high, the opening price, and the 50%. Sorry, I was mistaking it for another block. It's not another block, a bullish bearish order block. It's like the bullish. So the levels unlike the bullish order block is what we are using. So if you look at this candle is a bullish order block. In other words, this is the sense the bullish order block was traded, took out a high. So this is a stop run. So it did this Judas swing was here. This is a Judas, and this taking this old high. A series of old high is a stop run. So this is a stop run. It doesn't need a body candle for this Judas. Judas swings mostly are caused by they move very aggressively. So this was aggressive with that body candle, a Judas swing that happened here. So all this one was just taken out by wicks. The wicks does the damage, the body tells the story. So now let's continue. So the 50% was here. So then it was accompanied by a fair value gap. This fair value gap that was respected was because of the validation of the breaker block. Many of you will not see this and see this is where you should take entry. Now I want you guys to look at something again, the same thing I said on the V50 when I was explaining it. Look at this level, this key level. Look at how the 50% was respected. The bodies stayed inside of the 50%. Do you see that it's not magic? This is very awesome. This is very and if you guys are following me and taking note of what I've been saying, I want to show it very well so that you guys will see it. Look at the candles. These 2 candles, they did not even trade above the 50%, although they traded above the fair value gap. It's not supposed to be like that, but with the backup, this fair value gap and these key levels, these higher time frame key levels that was respected here, made it to become algorithmic. So the body stayed inside. Notice that. And what we see? The next one was the wick. So this becomes balance. This is a balanced PDRA. So this PDRA was a balanced PDRA on its range. So whenever price should come back to it, like what it did, look at what happened. Push the price aggressively, very aggressive, and we are talking on a weekly time frame. I know that you guys would have been like, if I have known this, I would have known how to do that and that. Well, it's a good thing you are seeing me showing you what you need to know and to look for in your chart before you begin to execute entries. So first we look at the environment, we do this tidying and all that. I can keep showing you different kinds of example on and on. This is what I'm looking for in all price action. Once I see this, it's not every time you will get this. It's just so good and so cool that we got this body that stayed inside of this other breaker. So this is the breaker. So this is the breaker block. So if price will later come back in the future to this place, you are going to experience a very high difficulty of price not breaking this level. It's as simple as that. So back to the monthly. So we are talking about why we did not see what we saw here. So this was that breaker that I was talking about. It wasn't a breaker on the monthly time frame, but it was a breaker on the weekly time frame. Oh, let me just change it. This is not a monthly bearish breaker, but just saw that one, so I'll change that now. So that's it. It's a weekly bearish breaker block. It's a weekly bearish breaker block, not a monthly. So just saw that. So now we have a fair value gap stayed opened. If you look at this area, you see that fair value gap this week took that week of that, created this fair value gap, this CB that we saw here. So this CB was just slightly traded into. So let's look at that. Do you see that? It was slightly traded into this area here, so it was slightly traded into. But anyways, that is a confirmation with this that I saw that is algorithmic, pushing price will get back to it. Did not, there was a bearish order block here, although it was a bearish order block, but it was not very to me it's not high in probability, because we did not see a fair value gap inside of this bearish order block on a weekly time frame. So that's why you saw this candle overlapping themselves in series like that. But this was what stopped them, this level, the main threshold that was respected and became a balanced PDRA, and the market was able to move down lower to attack this sell side liquidity. And later, after doing that, and if we are able to use our fibs to project, where price we actually do their, where we are actually going to get price. So we're able to get, so look at the swing 1, swing 2. We're able to get swing 1 and 2 using from this. So we're able to get our swing 1 and 2 down here. So this range is what I'm using. So that was the range I'm using to look at where I'm going to target. So it's targeted this and came to 2. We have this, our projection here, symmetrical swing. Then you be from this area, you know that price will get to this place, taking out the low and the high above and yeah, and even beyond. But nevertheless, I'm not teaching about fibs the way I use my fibs on synthetic indices. So now let's focus on the narrative now. So now this let's take this away. So now we know we have this and we have the confirmation. So this fair value gap is a balanced price range in a way. So because price moved away, so this is a reclaimed fair value gap, because we have series of this is a common gap, rather not a reclaimed fair value gap, although it was reclaimed, but it was a common gap. So the high was respected here. So when the fair value gap came here, stopped at the high of this fair value gap. So these are the signatures we look for. So this was the high, stop there, but we are not using this outside because this is supposed to have gone down. So it went, tested the low, but because of its weak, it has been broken here. The fair value gap has been broken somewhere here, is weakened. So this low, this high should, if it was not tested, it was not broken over here, this area should just allow you to just fall off. But because of its weak already here, but it is this 50%, the main threshold of the weekly bearish breaker block, that gave it that support or that shield that energy to generate the weakness, it needs to push price lower. So this was where it tapped into there. So just a little weak into that main threshold, then price continue to fall off and sell off. So now, when we are looking at the monthly time frame, what do we see again? On the weekly, let's go to the weekly because there's not much price action moves there. So on the weekly, what do we see again? So now, to anticipate what is happening here, what are we seeing here? We have a fair value gap here. We saw that on the monthly time frame, this is an order block, right? This is another block. So on the weekly too, a bearish order block for that matter. So on the weekly too, we have to let's mark this order block the way we normally mark them, right? Or we use the weekly to mark the other blocks. But let's use the monthly so that it will be easier for you guys to understand. So I'm going to mark this order block. I'll mark the opening price, the low. I'll use the low, the opening price, the main threshold. So now I've marked it. This is the monthly bearish main threshold order block, the monthly bearish order block, the main threshold of the monthly bearish order block. This is the opening price of that order block that was validated. So now inside the monthly time frame, we even have a fair value gap. Fair value gap was here. So let's zoom to our weekly. This is the bearish order block, the main threshold. So this is it. So this is the opening price. Although look at what we are seeing here. So apart from that, I want to see so this is what we are getting to see. So now what else do we see here? We have fair value gap. So we have pockets of fair value gaps. So we can take our fibs. Now the price here, we want to see what happened. So from this fair value gap, you measure to the low of this, all this candle was fair value gap. So we are working with the weekly time frame. So we want to see what happened and why price was doing what it was doing. So look at the fair value gap. So I don't want to take it, so I want to mark this thing well. So all I need is 50% of the fair value gap. So the 50% is my consign here. So I'm going to take this and mark the 50%. That's the consequent encroachment. So yes, this is the consequent encroachment of the fair value gap on the weekly time frame. Now look watch closely what happened when price begin to do its thing. So I'm coming. I want to take this a little bit upward, so by the time I begin to move it, it will not give us issue. So now this is the level. So this is the consequent encroachment. So what happened now? This is where we are focusing now. So now the price went up to fill this fair value gap. I said fair value gap can be filled, may not be filled completely, but the fact that it's traded and take out liquidities that are sitting below this CB, from this low, from this high of this candle to that low of that candle. So we did everything. So this was the 50%, and I told you that in another blog, a fair value gap, every mean threshold of other blocks especially, and also the same goes to fair value gap, they are always respected. When price gets there, there's a kind of rejection that used to happen instantly the moment price touches it. So now this also is algorithmic. From this swing high to this low, look what happened here. Look how price touched this, the wick stayed inside, just like the way I was telling you, the body stayed inside of this weekly bearish breaker block main threshold. So for the CE, the wick stopped there, then later we had this kind of manipulation here. If we go to a lower time frame, like I think the 4 hours, we'll be seeing a bearish breaker here. So this was a Judas swing on a lower time frame. So it took that high. So this way it stopped exactly there. So I think on the 4 hours we'll see the same thing too. We see the same on the 4 hours. Let me try and look at. So that's what we are seeing on the 4 hours. I think this should be it. Yeah, that's it. So in the 4 hours, this is it. This is what was happening there. So there was a kind of consolidation in the 4 hours. On the daily time frame, we are having this movement here. So kind of there's a rejection block happening there. So there was a bearish rejection block there. So now do you see what was going on with price? So now we know that it was respected on the weekly time frame. So now where do we expect the next run liquidity? But firstly, I would like to explain something very quickly here. Now looking back at 2019, we have this choppy movement with this bullish order block that supported that move to push price higher. So there was a choppy movement there. So this is a high resistant liquidity run. So we are in a high resistant liquidity environment inside of that bullish discount array. So that was the discount array that we're seeing. So now price has taken out this fair value gap here. So that's the reason why I said that remember when I posted something in the group when we were having our I just posted a theory there in the class section there. I said something there. I said that whenever you see gaps that don't feel completely like these gaps, let me go to the weekly time frame so you can see all this fair value gap. This fair value gap here was closed. So when you see gaps that does not feel, a fair value gap that does not feel completely like this, they tend to act like rocket fuels to boost your trade or prepare your trade to move against or to move towards the next drawn liquidity or the opposing drawn liquidity or opposing liquidity that you are aiming for. So this means that when you see something like this happen, it will give it the rocket fuel to push price fast. But because we are in a high resistance environment over here, looking at your left, even on the weekly, we can see that we are in a high resistant environment. High resistant liquidity runs is when you begin to have this choppy movements. This choppy movements that are termed as consolidation in every price action move, we tend to affect price whenever they are gravitated to take them as liquidity. Look at this kind of I would say this was easy to run this sell side liquidity. The algo will easily run this sell side liquidity, and this somehow will run this, because this one does not have other moves, don't have this choppy move. So this is a low resistance liquidity run environment, so it's easier. It's a low resistance liquidity run environment is when you begin to see at the bottom, you don't see too much of consolidation like this one here. Over here, look at this is a high resistance liquidity run, all this place, especially look at this one too. So this area, all this area will be giving this price action difficulty to move. We have another one here, we have another one here, we have another one series of liquidity here. Before they start reducing, the more they go up. So we have high resistance liquidity runs. So that's why the market is accumulating, consolidating a lot. Now we have this fair value gap has been respected, just like what I said. I said that whenever you see fair value gap that is like that, when you see fair value gap that they tend to not feel their imbalance, their gaps completely, it means that price is in a hurry to reprice to a level that's outside the range in its current external range liquidity. So this is an internal range liquidity, so the external range liquidity of this range will be outside, it will be forced from here. So I'm expecting price to come here to take this out, then move lower a bit and get to a particular drawn liquidity on discount, maybe one of these monthly discount array. So whenever we see something like this, it's an algorithmic. When we see that price is not in an hurry to take out an external range liquidity out, then we always know that this is an algorithmic signature too. So on the monthly, this is where I said I'm expecting price to come. Let me just take this. I expect this low. Yeah. I know a lot of people will be like, a lot of you want to like use this as a signal. Why am I expecting price to take this low? I'm expecting price, their algorithm, to do its accumulation here, because this is all consolidation. We've already seen it in a week time frame. It has already generated the power to push price to take this low, and that's the low we are looking at in the weekly here. This low, that's the low. So what is residing at this low? Sell side liquidity. So sell side liquidity is here. So what else again do we see? We have what? This is the array. This is the discount array that the algo is aiming for. That area. What is here? A BC. So we are expecting the algo to come to take the liquidity into that fair value gap that is there. Many still dream this thing will not happen, but when price was here, I anticipated that the price will not fill this other block a very long time ago in the group, and someone posted that chart, was asking me, and also in my private masterclass community, where my students who are my friends, also they are my friends, but they are also price action students, but they are learning through me on my private community, for me to show them how this Hago books price and how to use the key levels to anticipate the next round liquidity. So now this level was respected on the weekly time frame. It was respected. This is the level of the bearish order block, the mid threshold. We didn't get price to see move into that, but it was respected for this bearish order block. For this CB on the weekly time frame, I'm talking about this one, the calculation we did here. So now I'm expecting price, is likely that price drop into this monthly buy side imbalance, sell side inefficiency. So this BC is likely, there's high probability that the price will get this out into this buy side liquidity. So this is our draw on liquidity, and this is a target. And by the way, we have something forming. We have a high, a low, this is a low, and a higher high. What do you see? This is not coincidence, this is algorithmic. So we should expect the price to break down lower again. So this will give us a breakout block. A bearish breakout block is about to be validated. Once this low is validated, this becomes that bearish week. It will now become a bearish weekly breakout block here, and if this happens, we can expect price to keep going lower, or we expect consolidation. Once this is filled, we expect consolidation, because on the monthly, once this place is closed, if it was closed with a body candle, fine. If it's just weak it and consolidation begins, then this will become a balanced price range. If eventually price stop at the high, mean threshold, or at the low, so if price stop there, it can now reverse to now close this fair value gap and come back to do whatever it's going to do. But I'm not predicting what the outcome. I can't know what the outcome is. No one ever does. I can only anticipate the next draw on liquidity. So this is where I'm anticipating this low. Let me mark that low very well. So this is the low I'm anticipating, the low, and this BC. So it is high probability now that price can get to this low first, then this, because when we have a low resistance liquidity run, we have this low and that low. So this low, this sell side will be resting in this side and that side. So that is what I'm seeing, and that's what I have for the week. For those that said I should just do a weekly commentary on what I see for synthetic indices. So with that being said, so now we already know that the algo is aiming for a lower price, a continuation. We are expecting the algo to continue pushing price lower, so that we can get into this draw. This is the discount array that the algorithm is drawn to on the monthly time frame. Remember, I've showed you this is the discount array is drawn to. So that was why it was doing all this movement, all this gap, all these in balance price range and balance PDRA that was pushing price down. Now this is where we are going to. This is exactly our business. So if I plot my fibs also from the way I did it that time, if I plot my fibs from that low, so if I adjust that fibs, so look at my target. This first target was achieved, yeah. Second target achieved, yeah. Then this target, this is what I'm looking at. Number 2, first target, this took out the first target. These 2 equal relative low resistance, took it. Target 3, all these back and forth liquidities, yeah. The market brush everything down to this low finally, and all now the last one is this swing projection 3. So I'm expecting market to drop down lower. Let me go to the monthly time frame. So this is what I'm looking for. The price should drop here into this place and tap it. It's possible we get there. So now this is what I have. This is what I can say that I'm anticipating for the next round liquidity, which is the low and this. So anything that will close this gap, I think we should start experiencing a shift in market structure, or market still keep pressing lower. But now I'm expecting this low to be taken into this buy side liquidity on the monthly time frame. So this is what I see on my chart. So I hope this was insightful to all of you, and I hope you guys was able to learn one or few things in here. So until next time, I'll see you in the next class. So try to check back tests and see for yourself what I've shown to you on the price. So with that being said, I will bring this mentorship into close. So you guys should practice, stay put, and I'll also see you in the next class.